Time to touch base with the management of Godrej Consumer Products Limited to understand what transpired in the quarter gone by. We have Mr. Vivek Gambhir, the MD CEO of the company. Mr. Gambhir, good afternoon and thank you for coming on board. First up, among the FMCG companies that have reported their numbers so far, I think yours seem to be the worst hit. What hurt the GCPL most among the commonly cited factors like prolonged winters? There was agri stress as well. So what is it that impacted you so much?
Yeah, clearly the performance this quarter was weaker than our expectations, and we were caught a bit off guard. For the first 9 months of the year, we had delivered a respectable 10% growth, which had been largely volume-led. And so this slowdown was a surprise, and it was clearly something that we were not counting on. We were clearly planning for a strong quarter, but the performance did fall below our expectations. As we've tried to analyze what I think happened, we did see a significant slowdown both in rural India and some pockets of urban. There was a lot of liquidity challenges in trade in both wholesale and in general distributors as well. And there's obviously the impact of a prolonged winter, which was a contributing factor. But overall, I think consumption did take a hit this quarter, and therefore our numbers were impacted. Having said that though, our belief is that this is just a hiccup, a temporary blip. We should start seeing the consumption recover. A stable government and a strong monsoon will definitely be key. But given the huge potential for FMCG in India and the aspirations of young India, the headroom for growth is tremendous. And so later on in fiscal year 20, we do expect growth to return back. And what we've obviously been doing is that we've reflected a lot in terms of our performance, and we've taken a lot of corrective actions, both in terms of our go-to-market and distribution, along with our innovation agenda. We're upping the ante as far as launching disruptive, affordable innovations are concerned. And so we feel very optimistic that we will be able to return back to a much stronger performance in fiscal year 20.
Now that the winter impact is behind us, are you seeing a pickup in the HI and the soap space?
Yeah, I think from an insecticide perspective, this has been a challenge persisting for the last couple of years. The primary reason for a slowdown in insecticides was a massive upsurge in illegal, unsafe incense sticks. And so we have been working at the association level with the government to prevent these kinds of insecticides, incense sticks, for being sold in the market. At the same time, we have launched our own completely natural neem agarbatti, which is a very highly efficacious, safe product. This pilot launch happened a few months ago in a couple of states. The pilot has done very well. So later on this year, we should be able to scale up a launch across the rest of India. Along with that, we are planning to launch a couple of other very disruptive innovations in other formats of insecticides this year. And so we are very confident that you should start seeing a recovery in growth in insecticides this year.
No, Incense Sticks is one particular segment that seems to have hit the business. But you forayed there in southern regions. Can you tell us how the response has been?
The response has been very good. I think in a short amount of time, it has met all of our action standards. We are seeing good trials by users. Repeat rates also have been very high, which is a very important indicator. I think all the consumers who've used the product have given us very strong feedback. And so we are now looking forward to scaling this up in the rest of India.
International business saw some pressure in the African region. Any reason for that?
In our international portfolio, Indonesia has done very well. We've seen a strong turnaround in the business, and the business has delivered very strong performance on both top line and bottom line. In Africa, we did see some challenges. The challenges were primarily in South Africa, which is going through a very turbulent macroeconomic environment. East Africa, West Africa and the rest of Africa have been performing quite well for us, but the challenges were in our South Africa business. We have taken a lot of corrective actions there as well. We are relaunching our darling brand in the first quarter of this year. And so as far as Africa is concerned, we continue to believe it's a very exciting market for us. And this year we are confident that we will deliver both strong top line and much better bottom line growth in Africa this year.
Well, Africa might be a tad bit weak, but on the bright side, India business has done quite well. It's been pretty stable. Tell us what aided you.
Our India EBITDA margins are at a record high, largely driven by some very strong work that the team has done on cost reduction, along with some of the benefits we've gotten from relatively benign input prices. Our expectation is that we should be able to sustain these margins going forward. The focus will clearly be on driving volume growth and gaining market share. And so our biggest priority is to be able to drive volume growth. Having said that though, we do believe that if we can deliver strong volume growth, we should be able to sustain these level of margins.
So Godrej is always known to deliver consistent earnings compared to the peer. Plus, you don't have, as much as a rural sustenance as some of your other peers have. So, what will you do to get back in store for FY20?
For FY20, we are definitely gunning for double-digit volume growth. For the first 9 months of last year, we had delivered 10% growth in India, which was largely volume-led. So I see no reason for us to be able to get back to the strong growth trajectory that we have always historically delivered. This growth will come from a combination of 2 or 3 things. One will be clearly our continued focus on disruptive, affordable innovations. We will continue intensifying our focus on these innovations. The second is the team has been doing some very good work in terms of being able to enhance our distribution and our go-to-market approach. That should start yielding us good benefits. The third thing is we recognize that India is a very complex country with many Indias, so to speak. So the team has become very granular, very analytic in terms of being able to identify pockets of opportunity. And this micro approach should enable us to be far more agile in our execution. So we remain very confident that we should be able to deliver a much stronger fiscal year 20 versus last year.
All the very best for that, Mr. Gambhir, and thank you for joining us and helping us understand the details of your Q4 performance.